Hello, today is January 30th, 2021. Let's start with our disclaimer as we always do. It's my plan for Monday when the market reopens. Monday is February 1st. No guarantee I'm right. I don't predict what happens overnight. Trade at your own risk. A lot of people just skim over the rules I have. I don't want to repeat them every time, but I'm still having people who try to pitch their business, who brag about their trades, or who make calls without giving the reason. And if you do it, I'll block you. And my address is mejt.trades@gmail.com. Well, let's start with what we said. We said we had a big drop to support, and most of the time support holds, but you couldn't act on it because the downside if it failed was too big. The commonest thing was a gap and prompt move outside the day's range. We certainly got that, and it was obvious before the open that we weren't going to be gapping up, and so gapping down in the wrong direction, according to the rules, kills the call before the open. This was the pattern with the early high, and when we reopen Monday, we're also going to have a pattern with the early high. These are the patterns I'm expecting to see next week. During the day, MEJT said ultimately higher prices would print, and they did. We didn't print this price target here, 38.21.94. Just remember that MEJT likes to leave a failed target at major changes in trends, so we'll add that one to the list. In the afternoon, we had a rally. MEJT says it's not the real thing. It targets 3701.75. And unless we gap up smartly, that is my call for Monday. The other side of the coin here is we gap down, hit a new low, and closed over the midday lows. It actually should lead to higher prices if these lows hold early. So if these lows hold early, I look for higher prices. But if we don't gap up, I look for this lower price, 3701.75 as well. Well, let's start out by talking about the long-term picture, and I think the top's in. This is the count I'm using. I have this as the end of the bull market. That's wave 5. We have a sharp wave A down. I think we've completed wave B up, and we now look for a wave C down, which is comparable to wave A. I know some other people don't count it this way. They're trying to count this as wave 4. To me, it's an impulse. They're trying to count this as wave 5. It's an overlapping corrective wave to me, so I don't agree with that count. Now, how does this rally compare to other rallies we've had? Well, if you set this at 100%, you can see the last rally we had was 61.8. And the rally we had before then was 61.8. Rally we had before then was 61.8. So all these rally legs are connected by their Fibonacci ratios. And it certainly makes a pretty picture if we stop right here. More important than that, though, is the fact that the breadth has just collapsed. The number of stocks with positive patterns has fallen off the charts in a short period of time. Well, this is the count I'm using. It's not the only count. We've been saying for 3 months that sentiment indicators were off the chart. And in 3 days, we've erased 2 months worth of gains, and I think there's more erasure to come. There really isn't a good Fibonacci ratio at the top here. It's possible to relabel the waves so you get good fibs. There's nothing wrong with this count, doesn't break any rules. I just think this looks like one wave to me. But that doesn't mean the other count's wrong. They're both valid counts. As far as how low we're going to go, you can draw a Fibonacci grid here. You can end it here or end it here. You get 2 Fibonacci grids. A lot of the times wave C is equal to wave A. You get pretty steep drops here. I mean, this drop from here to here was over 1,000 points. And even to here is over 900, I think. So it's not something I want to stand in front of, because I think if this count's right, and I think it is, we're in for a long way down. Doesn't mean we drop every day, doesn't mean we don't have whipsaws, but it's a pretty bleak picture. Well, here was the diamond on stilts. Here's your stilt. Here's the first challenge of the origin of the left stilt. Second challenge, broke through. Now that's resistance. Monday's pattern has the early high. Doesn't mean you won't gap down. There's a lower MEJT target. Unless we gap up sharply, I favor it to print. We gap down, hit a lower low, closed over the midday low. Unless that low falls early, we should see higher prices at some time during the day. We actually have a big increase in buying of puts, and there's a volume spike, so you can't rule out a rally here at some point. A volume spike in the E-mini contract. Even if we see higher prices, it doesn't require a higher close. I'm assuming a major tops in, and all surprises should be to the downside. Market breadth has collapsed, and it's not conducive to sustainable new highs. We have a lower target, but we can't rule out printing higher prices as well if this low holds early. This is an old FOMC price. You see how it provides support. So regardless of what happens on Monday, we look for a pretty steep drop if wave C down is comparable to wave A down. After that drop, though, I think we could continue higher again, but that's looking way in the future. That's not how I do things. Monday has the early high, and that's today's call.